I blow it up. My name is Bled, and what I do on this channel, I document my trading journey, talk about the highs and lows of trading. And ever since I took the first trade on this account, I've been documenting the whole journey from phase 1 to phase 2A up until this point that I've blown it up. This video is going to be divided into 3 main parts, right? Now in the first part, we're going to talk about why I actually blew up this account, because there is plenty of reasons why, but I'm finna cherry pick a few main reasons, right? Secondly, we're gonna talk about the lessons that I've learned trading this account. There are plenty of lessons that I've learned, because you know what it is in trading. Whenever you take a loss, it's a lesson, right? Part number 3, we're gonna talk about the resolution and what things that I could do better to actually elevate my trading to the next level and probably stop blowing these accounts ASAP. So without no further ado, let's dive into the video. Point number 1, why I blew up this account. The biggest problem that I've came to notice and the reason why I've blown up this account is risk mismanagement. I know this is very common to most other traders out there, but personally I started off risking enough money, because in phase 1 I was risking, my risk management was beautiful, but when I started taking losses as we approached the holiday season, I started getting losses. So when I started getting these losses, I increased my risk in order to pull back these losses as early as possible, and I came to notice that that has came to cost me a lot. And if it's a character that you all guys have, you need to make sure that you eliminate it as early as possible. Another problem that I've came to notice is that I don't care, especially when I've lost a couple of trades. For example, when I was down around $400 on this account, I was like, at this point, it's done. I didn't really care about if I make a loss or if I win. To me, in my mind, I was like, shit, it's already done for it. Because this account had a $500 maximum stop loss. I only had to lose this $500 to fail this challenge. And personally, whenever I lost $400 on this account, I was taking trades recklessly. I was mismanaging risk because I wasn't caring about it. In my mind, I felt like, shit, this account is already done. I'm down $400. I felt like this account was done for it. You usually come to notice that that account still had potential even when I was down $400 after I actually blew it up. Now, point number 3 why I actually blew up this account is revenge trading. Now, I know this is common to you guys, but me personally, whenever I hit a loss and another loss, when I come back to revenge trade, I don't actually just revenge trade with the same lot size. I double it up. Because whenever I was losing a trade, I would come back with the bigger lot size and a tighter stop loss. If I was risking 40 pips on the past trade that I lost, let's say $50, I come back with 20 pips when I'm risking $100. That's literally very dangerous, and sometimes you come to notice some of these things when you've actually blown it up and you're like, I knew that I was doing something wrong, but I couldn't control myself, right? So basically, revenge trading is something that I've had to face while trading this account. Point number 4 is over trading. Now, personally, I know that I overtraded, and it's something that I've been facing for a while. Personally, I'm a day trader, but when you look at my daily trades that I take, you may think that I'm a scalper. Especially when I'm losing, I overtrade because I try as hard as possible to make that money back, and I've come to notice that it's something that has costed me this account. One of the lessons that I've learned trading this account, number 1, I'm not holding trades overnight again, especially when I'm trading gold. And this is something that I actually didn't know prior to me trading this account, right? So I took a certain gold trade, right? And I was like, let me hold this trade throughout the night, right? Because it was looking beautiful, everything. So during the night, prices pulled back, right? A little bit and barely touched my entry zone and went back towards my favor. When I woke up checking on the trade, I was like, what's going on? Like, the trade was already closed. I texted funding pips and I was like, what's going on? Like, my trades got stopped out and prices didn't touch my stop loss, right? And this is what they replied.
We would like to express our gratitude for contacting the Funding Pips support team. Your stop loss has been triggered due to increase in spreads during market rollovers. Price may not reach the level, but your ask price line of your spread reached your stop loss and it was slipped due to the available price due to less liquidity. During rollover, spreads in the market will widen due to there being no active session, which means there is very little available liquidity. I can understand your frustration, blah blah blah. Now, personally, I knew that prices could actually increase the spread during the night, but I didn't know that it could be this crazy because it was a difference of almost like 20 pips, you understand? And that was literally a lot, guys.
If I'm day trading, I'm not holding trades overnight again, because actually I had a chance to take profit before the end of London session, but I was like, let me hold this throughout and let's see. So basically, I'm going to stick to day trading, and if the trade is to be held during the night, I have another solution for that, which I'm gonna be telling you guys in a minute. Lesson number 2 is don't base your trades over yesterday's trades. Now, personally, I have a tendency, right? Whenever I take a trade, for example, I took a trade on Monday and it was a buy and it was a breakout, same setting. If it's the next day on Tuesday, my mind tends to get stuck in that setting. So the next day, I'll be like, okay, so I took a breakout yesterday on USD JPY. I'm like, all right, I'm gonna take the same trade on the same pair even today. And when I wake up, opening my trading view, the first pair that I look for is USD JPY. And when I see the same setting, I go in, and I've come to find out that this is something that is not fruitful in the end, right? Because prices change every day. If prices are breaking out today, tomorrow they may be pulling back, right? Tomorrow they may be ranging, and at a certain point they may be trending, right? They may not give you those pullbacks as you want. They might just trend towards the upside and not give you those pullbacks, right? At a certain point, whenever I take a winning trade, I actually tend to look for the same trade the next day, and it's something that I've came to find out is not fruitful at the end, right? So what are the resolutions, or what am I gonna do next, right? Number 1, I am not trading one account at a go, right? Because I've came to find out whenever you're trading one account at a go, especially when it's these prop firm accounts, usually we have targets with these accounts, right? You're like, I want to pass this prop firm by the end of this month or by the end of a certain period of time, right? And secondly, personally, I have two characters. At a point, I can be really aggressive, and at a certain point, I can be really conservative. Like, I could take very small risks, and at this aggressive side, I can take very high risks, right? At points that I shouldn't be taking them. So what I've come to find out is that whenever I'm trading accounts, I should at least have two accounts. And this is something that I've come to figure out that could actually help me in the long run, right? Because I found out that at a certain point in time, I was pressurizing this account because it was the only account that I was trading, right? And remember, at times you have A plus trades and B plus trades, right? And what I mean by A plus trades, these are trades that have a high probability of going into your direction. And the B plus trades, these are the trades that actually have a lower probability of them going into your direction, right? So basically, I've came to find out that at times you may have B plus trades for a while, right? Without having these A plus trades. And remember, you are trading only one account, right? For example, if you have passed phase 1 and you are at phase 2, some trades are not actually good to be taken on phase 2, right? Because at this time, you know that you are close to getting funded, right? You'll do everything to get to that point where you funded, right? And at times that you're getting these B plus trades, it's better that you take these B plus trades on an account that is still on phase 1, right? Because this account may not pressurize you as much as this account, right? So basically, whenever you have account A and account B, and let's assume you've passed phase 1 on this account and you haven't passed phase 1 on this account. So when you have A plus trades, you take them on this account that you have passed phase 1. Whenever you fail this account, it's gonna hurt you more than you have failed this account, because you have put in more work into this account than this account, right? So if you have those trades that are of a lower probability, you will take them on this account but not on this account, right? The next time I'm trading, I'll at least have two accounts. One account will be for my aggressive side, second account will be for my conservative side. The second resolution is having maximum trades that I take per day. So this is something that I was doing in the past, right? But recently I had stopped doing it. So I felt like I was good in all sessions. Well, I was good, but markets did change and it flipped on me, and I'm gonna have a maximum number of trades that I take per day. Now, as I've said, I'm gonna have two accounts. Account A, which is gonna be aggressive, account B, which is gonna be conservative, right? Now, if I take two trades on this account and they all fail, I'm done for that account, right? And if I take two trades on this account and they all fail, and I'm done for this account. What this will actually help me, when you add up these trades, these are actually 4 trades, which is better than taking 4 trades on one aggressive account. Basically, I've divided my risk into 2 times, and if I'm to get profit on all these accounts, I've actually multiplied my profit times 2, right? And if I'm to take losses, I'm to divide that loss into 2 times, right? And it's not gonna hurt me as much as I could have took all those trades aggressively on the same account. So basically, having a maximum number of trades is something that I'm going to consider in the near future. So notice that everything that I have said, nothing is on the charts, right? Everything that I've said is literally psychological, and it's something that is coming from me. This is actually a point to prove that we are the people that are actually holding ourselves back, because there could be times where the technical stuff could have came in, the markets could have stepped in, but those are the least times that I actually committed mistakes than the markets actually committed on me, right? So it's just something to reflect on ourselves and understand that in the long run, it's ourselves that are holding ourselves back. Whenever you want to get there real quick, at the end of the day, you're gonna get back real quick, right? And I've been trading this account for the whole month and I've blown it up, right? So basically, it's just something to reflect on yourself and understand what you're doing wrong. At the end of the day, we're gonna get bigger. So that's the end of the video, and I'm gonna see you guys in the next one. Big shout outs to my boys in Nigeria, my boys in Kenya, my boys in South Africa. I'm gonna see you guys in the next one. Without no further ado, let's get it.